At the New Orleans Investment Conference, checking in with Rick Rule, CEO of Sprott US Holdings. How are you doing, Rick?
Great, Albert. How are you?
I'm great. We just enjoyed a great presentation by you in there to a packed room. That was very pleasing to see. Has the sentiment returned, the positive sentiment returned to gold among this more general focused audience?
Well, in fairness, I would say that this is a gold-centric audience, but certainly the mood here this year with gold and gold stocks up is noticeably improved over last year. I wouldn't describe this probably as a generalist audience, though. Although, as you point out, there are exhibitors from many different industries here. Yeah. Probably less focused on our conference in Vancouver, but yes, a gold audience.
Yeah. So that's the conversations you've had with investors so far. Do they reflect an increased enthusiasm in the market? What are they telling you?
I think that's the case. I think generally at Sprott, the response that we've been getting, particularly from newcomers to the market, has been positive, and that's been reflected here. There's a newfound, if you will, aggressiveness among the investors. There's a sense that we have been through the worst of the bad times and that we're coming into good times, at least in the precious metals side.
Right. A little twist on your presentation this year is going to make for a great headline on an article. That is, you don't need to really speculate to beat the market when your market is going to beat, the market you're in is going to beat other markets handedly. So what was the point there?
Albert, I think that's very true. The Barron's 40-year gold mining index, which we've talked about before, shows us some very interesting things. It shows us, first of all, that we are at or pretty close to the bottom of the market in a 40-year context. But it also shows us that the 9 major recoveries that we've seen have been between 200% and 1,200% over compressed periods of time, 18 months to 40 months. So if just capturing the market gives you somewhere between 200% and 1,200%, the idea that you take a lot of risk to try and beat that is a little silly. I think that rather than increase the risk to beat the market, that you should buy, at least with 75% of your money, the best of the best stocks, so that you capture that market beta, but with less risk.
Why can you say you're going to capture the beta with, I can see how the risk would be lower, you're buying better companies. Don't sometimes marginal companies boost the return, and therefore, I mean, do you think that you would actually capture the same beta of the index?
I suspect that actually over the course of a bull market, you'll probably give up 20% or 25% in performance, but you'll do that by de-risking your portfolio by 70 or 80%. I'm making these numbers up. You take substantially less risk to make all or most all of the move. I'm also not saying, Albert, that for a different portion of your portfolio that you shouldn't speculate. There are very few ways in the world to add economic value more rapidly than through the drill bit. There's a lot to be said for exploration. There's a lot to be said for buying very high quality junior gold stocks that grow at the same time that the market's ability to appreciate them also grows. Those are all good strategies. All I'm saying is that you should invest before you speculate.
So what separates the line? You say 75% highest quality, 5 or 10 companies, the last 25%, the best of the rest. What's the difference between the best companies in the industry and that 25% that's the best of the rest?
I would say people ends up being what you want. I mean, certainly there can be some outstanding discoveries or outstanding purchases by people who are not so good. But the truth is, in my life, most of the performance that's been generated to me and hence to my clients has come from 10 or 15 people. And you find that the best people always end up building the best companies. As an example, I was talking about silver from the podium today. Silver moves further than gold, and silver stocks are rare, so they move further than gold stocks. But among the best of the rest, you certainly want Pan American Silver. What is Pan American Silver about? A superb human being, like Ross Beaty. This isn't meant to get your listeners to go out to buy Pan American Silver. It's meant as an illustration that the best of the rest are driven by great people.
I know the lights are really bright up there, Rick. You were up there staring into bright lights. I was at the back of the room looking at the entire audience. And one thing that was interesting is, even though, as you correctly point out, this is more of a gold-themed conference than other conferences, but it's nowhere near as enthusiastic as our conference is. And when you asked the question, how many people think gold is going to go up, it wasn't by any means unanimous. It was split. It was a mix that you would expect to see if you would ask the same question about Apple or Amazon or any other. That's got to be encouraging, that the enthusiasm is not sort of over the top yet.
That is attractive. The other thing that's attractive to me, Albert, and I have to say I give you some credit for this, is the inbound inquiries to Sprott. The people that are talking to us about doing business and opening accounts are, for the first time in my career, young. I used to joke that our audience is literally and figuratively dying. But the fact is that the appeal of gold and the gold narrative is beginning to broaden. So at the same time that the old gold audience here isn't unanimously on board yet, which is good, the audience is also expanding, which is good too.
And there may be more coming. You hosted or moderated a mining panel, and one of the answers to one of your questions came from Gwen Preston, and she said that maybe Canadian miners haven't done as well because the audience for those investments has been distracted with marijuana and other things. Did you buy that answer? And if so, that bodes well for the junior miners, doesn't it?
I'm not sure I buy it. What I think I buy, given the young people that I talk to, is that the younger generation is thus far the most narrative-obsessed generation that we've ever seen. And the gold narrative, once it gets going, is unusually powerful. Narratives are, of course, justified by price action. So a bull market is what sinks the narrative message. The other thing about younger investors, millennials, I guess is what I'm supposed to call them, is that they're real consumers of social media, which means that their paradigm and prejudice isn't top-down, it's spontaneous, which is probably one of the reasons why the narrative is A, so powerful, and B, why it spreads so fast. So my suspicion is that an extraordinarily powerful narrative like gold, one that has history, one that's driven by greed, one that's driven by fear, could be an extraordinarily powerful narrative among young people. If you think about in the United States, the circumstance that thinking young people find themselves in. My generation, a little bit older than you, made ourselves all these extravagant promises. Medicare, Medicaid, all these other federal programs, and we've magnanimously allowed the younger people to pay for them. I think that narrative will play. I don't think they'll probably have the guts or whatever it is to say, you made the promises, you keep them. But the truth is they find themselves in a circumstance where, because of federal intervention in the housing market, among other things, they can't afford to buy houses. They found themselves on the hook for my Social Security, my Medicare, my Medicaid. The answer to that is probably more quantitative easing, which young people will recognize as counterfeiting. And one of the sort of ameliorating things that young people could do is think about gold, the same thing that people have done when they've lost faith in communal solutions for 2,000 years. And I'm not saying they will, but I think this could be extremely powerful as a narrative for young people because they're going to experience the circumstance that would cause them to look for answers.
I'm going to give you a chance to answer one of your own questions. You asked the panel, why haven't the juniors kept up with the price of the commodity and the price of majors? We had a variety of answers on that panel. How would you answer that question?
Panel was far too generous. I think most of the companies that make up the juniors are junk. Some years ago, at random, we pulled, I think, 25 juniors from the Toronto Stock Exchange Venture Index, and we looked at financials and balance sheets, and we found that those companies over 5 years had spent 65% of capital raised on general and administrative expenditures. 35% went in the ground. A major on an exploration program allocates between 12 and 15% to G&A. So in a universe of, say, 1,500 juniors, there may be 200 that are viable. Stock selection is all important, and most speculators are too lazy to do stock selection.
We should be proud then that the guy who got closest to the answer was your old colleague, Brent Cook of Sprott, so give him some credit for that.
He deserves the credit. He's a great picker.
All right, we're going to break here. Thank you very much, Rick.
Thank you, sir.